Hello, Shmuley Zand here from the law offices of Samuel T. Zand PC. Today we're going to continue discussing commercial mortgage refinances. In our last clip, we began by discussing the importance of obtaining the services of an excellent commercial mortgage broker. Today we're going to discuss 4 items that are going to be found inside the loan commitment and are definitely things to think about ahead of time. Item number 1 is going to be the personal liability aspect of your loan. Item number 2 is going to be the prepayment terms or prepayment penalties that you may be hit with in the event that you pay it off early. Item number 3 is going to be the importance of thinking about an assignment of the mortgage. And item number 4 is going to be the source of the funds from where you're going to make the payments on this loan. So let's jump right in. Item number 1 is the personal guarantee. Personal guarantee or personal liability means that even though the entity that's taking out the loan is going to be an entity such as an LLC or a corporation, nevertheless, you're personally liable, you're personally guaranteeing the debts of this loan so that if God forbid there's a default under the terms, you're held personally accountable. And by and large, lately, more and more, the commercial mortgages are requiring some level of personal guarantee. But please note that that can sometimes be reduced in terms of your liability, such as a bad boy guarantee or a carve out so that it's limited personal guarantee. And what that is instead of it being a full-blown guarantee, it says that if you contravene any of the terms under the mortgage intentionally, then you're going to go ahead and be personally liable. But as long as you don't do that, then you won't be personally liable. Something to think about. Number 2, prepayment terms. So what that means is, say you take out a mortgage and it's a 5 or 10 year term, as many of these commercial mortgages are, and you want to pay it off early, either because you want to refinance to cash out or for lower interest rates, or because you want to sell the property. Either way, that's going to be paying off the loan before it's due. You're going to be hit with prepayment penalties, and that's something to think about and to negotiate ahead of time. Item number 3, an assignment of mortgage. Inevitably, you're going to want an assignment of mortgage if you refinance. What does that mean? That means that when you take out a mortgage, you're hit with mortgage recording taxes, a very large part of your closing costs. When you go ahead and you refinance, what you want to do is save on those mortgage recording taxes, and the vehicle to accomplish that goal is an assignment of mortgage. Technical, but very important. So what's important for the mortgage commitment? What's important is to negotiate the terms so that your current bank will not slap you with tremendous amounts of fees, both legal fees and administrative fees, in order to grant you the right to do the assignment of mortgage. And so that's something to think about ahead of time. Finally, where the payments are made from. For example, let's say you have your own banking institution, your own, you're comfortable with that. You don't want to have to open up an account with the current lender that you're taking this new loan from. However, sometimes they require it, many times they do, and then sometimes it's not reasonable because you don't have the bank doesn't have any local branches where you operate your business. Nowadays, that's less critical because most of the time with online banking, you don't need a physical branch, but it's definitely something to keep in mind ahead of time. So I just want you to remember that at the law offices of Samuel T. Zand, we offer real representation and real solutions for individuals facing real obstacles. Feel free to give us a call, 718-258-1100, or contact us at samuel@zandlawoffices.com. Have a great day.